Welcome to this edition of The Prudent Investor. In this issue, we will be looking at financial markets around the world and how they fared during the fourth quarter of 2019, as well as the impacts on a globally diversified portfolio on an annual basis. On this slide, we have the big board, which provides us with a quick summary of how financial markets did during the quarter. The fourth quarter was fairly strong, except for international bonds with a return of negative 1.1%. Here we have the long-term market summary. This provides us with a quick summary of how financial markets did during 1, 5, and 10-year periods. As you can see, with green arrows across the board, things have been pretty good overall. We call this slide the noise meter. Here you will find the headlines of the day from the fourth quarter of 2019, which most people spend their time worrying about. After reading those headlines, who would have thought the overall markets would have been so strong in the fourth quarter of 2019? This slide is the World Stock Market Performance Noise Meter for the past 12 months, ending on December 2019. Again, most of the headlines would have one believe it was a poor year for stocks. However, the last headline posted tells the story of how the disciplined and patient investor can be rewarded. U.S. stocks close out decade with 190% gain. Here is a closer look at world asset classes. Equity markets around the globe posted positive returns in the fourth quarter. Looking at broad market indices, U.S. equities outperformed non-U.S. developed markets, but underperformed emerging markets. Value stocks underperformed growth stocks in all regions. Small caps outperformed large caps in the U.S. and non-U.S. developed markets, but underperformed in emerging markets. REIT indices underperformed equity market indices in both the U.S. and non-U.S. developed markets. Turning our attention to U.S. stocks, U.S. equities outperformed non-U.S. developed equities, but underperformed emerging market stocks in the fourth quarter. Value underperformed growth in the U.S. across large and small cap stocks. Small caps outperformed large caps in the U.S., and REIT indices underperformed equity market indices. On this slide, we take a closer look at foreign developed markets. Overall, in U.S. dollar terms, developed markets outside the U.S. underperformed both the U.S. equity market and emerging markets equities during the quarter. Small caps outperformed large caps in non-U.S. developed markets, and value underperformed growth across large and small cap stocks. Meanwhile, in U.S. dollar terms, emerging markets outperformed developed markets, including the U.S., in the fourth quarter. Value stocks underperformed growth stocks, and small caps underperformed large caps. This slide provides you with an excellent overview of individual equity markets around the world. In US dollar terms, Ireland and Sweden recorded the highest country performance in developed markets in the fourth quarter, while Australia and Belgium posted the lowest returns. In emerging markets, Pakistan and Hungary were the top performers, while Chile and Thailand posted the lowest performance. Now looking at how select foreign currencies fared versus the US dollar. In developed and emerging markets, most currencies appreciated versus the US dollar. The few exceptions included the Japanese yen and the Turkish lira. On this page, we have a review of real estate during the quarter. U.S. real estate investment trusts, or REITs, underperformed non-U.S. REITs in U.S. dollar terms during the fourth quarter. International REITs were up 4.4%, while U.S. REITs were down 1.1%. The Bloomberg Commodity Index total return was up 4.42% in the fourth quarter, with coffee leading the way, up 24.33%. At the other end of the spectrum, was nickel and natural gas, down over 17%. On this slide, we can see that interest rates across the US fixed income markets decreased for the fourth quarter. Remember, there's an inverse relationship between the price of a bond and the yield of a bond. When bond prices go up, yields go down, and conversely, when yields go up, bond prices decrease. The yield on the 5-year Treasury note increased to 1.69%. The yield on the 10-year Treasury note increased to 1.92%, and the 30-year Treasury bond increased to a yield of 2.39%. On the short end of the yield curve, the 1-month Treasury bill yield decreased to 1.48%, while the yield on the 1-year bill dipped to 1.59%. The 2-year note yield finished at 1.58% after a decrease of 5 basis points. On this slide, we can see that interest rates in global developed markets generally increased during the fourth quarter of 2019. On this page, we see the hypothetical results of various portfolio allocation mixtures over longer periods of time. For the fourth quarter, it was all about stocks, and as one would expect, an investor who had more money in stocks than bonds experienced higher returns than an investor with more bonds. For the quarter, a portfolio with 100% in stocks was up 9.07%, while a portfolio with 100% in Treasury bills increased just 0.41%. On this slide, we have an article by Dimensional Fund Advisors, Tuning Out the Noise. Here, Dimensional points out that when we are confronted with all of the noise from the news media, it's easy to lose focus of the long-term benefits of staying invested. It's easy to buy into what the media is selling and give in to strong emotions of fear and greed. In some of the previous slides, we saw the benefits of being a disciplined and patient investor. It is these times, when we don't allow our emotions to guide investment decisions, that can lead to a successful investment experience. We hope you have enjoyed this edition of The Prudent Investor.